So Alphabet had an absolutely incredible 2025. We're talking a 65% surge in its stock price, its best year since way back in 2009. It was pretty much all anyone on Wall Street could talk about. But according to this brand new analyst report we're going to deconstruct today, the tech giant is really just warming up. And that, of course, leads to the million-dollar question that every single investor is asking. After a massive run like that, is there any gas left in the tank? Is the party over? Well, the short answer from this report? A big, resounding no. In fact, it slaps a strong buy rating on the stock and sets a base price target of $380, which suggests there is still a ton of room to grow. All right, so here's how we're going to break this all down. We're going to dive into the three main pillars that are holding up this bullish argument. Then we'll look at the specific investment strategy the analyst lays out. And finally, we'll wrap up by covering the key risks you've got to keep on your radar. First up, and this is absolutely critical, we have to talk about the one thing that was hanging over Alphabet's head for years. I'm talking about a huge regulatory threat that, according to this report, has basically just vanished into thin air. The entire story changed in what felt like the blink of an eye. The whole thing went down in just 48 hours back in early April. You had this series of rapid-fire, game-changing events that completely reshaped Alphabet's future and sent a massive signal to the market that the worst fears were officially off the table. And here is the absolute crux of it. It's the huge gap between what the market was terrified of and what actually happened. The nightmare scenario was a forced structural breakup from the Department of Justice. I mean, can you imagine Alphabet having to sell off Chrome or even Android? Instead, what they got was a much, much softer behavioral remedy. And just so we're all crystal clear on why this is such a big deal, let's just quickly define what we're talking about. A structural remedy literally breaks a company into pieces. A behavioral one just changes how it behaves, like making it add a choice screen. By going with the behavioral option, the DOJ basically took the biggest, scariest, most existential threat to Alphabet's entire business completely off the board. Okay, so let's move on to the second pillar and see how this all connects. With that huge regulatory storm cloud gone, the market could finally refocus on what that cloud was hiding, the mind-boggling financial power of this company. This newfound clarity is really what makes everything else possible. And what a powerhouse it is. I mean, Alphabet is just an absolute cash printing machine. For the first time in its history, it blew past the $400 billion mark in annual revenue for 2025. That's a 15% jump year over year. Now, this is where it gets really interesting when you look at where that growth is coming from. Yeah, search and YouTube ads are still growing at a really healthy clip. But look at Google Cloud. It has become the new superstar with this explosive 48% growth. It's clearly the new engine driving the train. And the company is not just sitting back and counting its cash. No way. They are stepping on the gas hard. The plan for 2026 is to basically double their capital expenditure to an almost unbelievable $180 billion. And just to be clear, when we say CapEx or capital expenditure, we're not talking about new office chairs. This is a direct all-in bet on the future. They're building the literal physical infrastructure, the sprawling AI data centers, the custom-designed AI chips that they believe they need to win the next decade of artificial intelligence. And this is where all the pieces really start to snap into place. That giant pile of money we just talked about, it's not just being spent randomly. It's all fuel for the third and maybe the most important pillar of this whole buy thesis, a self-reinforcing competitive advantage that the report calls the AI flywheel. It's actually a beautifully simple idea, but it is incredibly powerful. It's a three-step loop. So, step one, Alphabet's billions of users on Search, Android, and YouTube give it a data set that nobody else can touch. Step two, that data helps them design and build better custom AI chips, which leads to step three. Those better chips power better AI products, which, you guessed it, attract more users who generate more data. And the wheel just spins faster and faster. And the engine at the very heart of this flywheel is the TPU, the Tensor Processing Unit. You could honestly call this Alphabet's secret weapon. It's their own custom-built AI chip. And because it's designed for one thing and one thing only, AI, it's way more efficient than the general-purpose GPUs you can just go out and buy. It's a massive advantage. So now that the why is pretty clear, you've got regulatory relief, you've got financial dominance, and you've got this killer AI advantage, the report then gets down to business. It lays out a very practical playbook for investors on how you might actually act on all this info.
So, the analysis lays out 3 different ways this could all play out. The base case, the most likely scenario, puts the price target at $380, which is about a 19% upside from here. If everything goes right, the bull case, it could hit 420. And if things go wrong, the bear case is down at 270.
And it gets even more specific than that. The report actually outlines a tactical game plan for how to build a position. It suggests putting 40% of your funds in right now, holding back another 40% in case there's a dip into that $308 to $314 range, and then being ready to buy aggressively if it were to fall into the high 200s. But look, no investment is ever a sure thing, right? And any good analysis is going to be honest about the potential downsides. So the report is very clear about the things investors need to be watching like a hawk. And these are really the 3 big variables that could throw a wrench in the works. First, is that massive $180 billion investment actually going to pay off with real revenue growth? Second, there's another antitrust ruling on the horizon, this time from the EU, and you'll want to circle April 15th on your calendar. And finally, these data centers use a ton of electricity, so if energy costs spike and stay high, that could really start to eat into their profit margins. Ultimately, though, the report's conclusion is that all the recent news has basically unshackled Alphabet from the heaviest chains that were holding it back. And in its final analysis, it uses this really powerful metaphor to describe where the company stands right now on the market. So the regulatory storm clouds have finally parted. That financial engine is just absolutely roaring, and the AI flywheel is spinning faster than it ever has before. And all of that leaves us with one final, pretty provocative question to chew on.